Hey YouTube, this is Zach with the Gillies Financial, and today I'm going to be talking about BlackSky Technologies Inc., and they trade on the New York Stock Exchange under the ticker symbol BKSY. This is a company that I haven't covered in probably 2.5 years, but we covered when they originally went public, played it, and haven't looked at it in probably since I made the last video. However, someone recently commented on that video, and I wanted to review the company and evaluate kind of where are they today. As you can see by the stock price, if you were around when you originally saw those first videos, is that they have had a very long fall from grace. So you can see that here on the screen that the time when we were buying the pre-SPAC company and into earnings, they actually did really well off of the initial jump, but this was during kind of the SPAC mania. And since then, since they've been a reporting company, they've announced earnings repeatedly with pretty dismal results. Now, I want to highlight that if we look at the company right now, they are sitting at about $250 million, about $250 million in terms of market capitalization. Now, if we look at the fundamentals associated with the company and come over here to income statement, you can see that they've been making 15 million, 16, 19, 18, doing around an annual run rate or quarterly run rate rather of 15 to 20 million. However, the issue with this is you can see that they have pretty impressive expenses when you're running those type of revenue numbers, which is causing pretty large net losses during this time frame. So you can see that they continue to have pretty large net losses without a real path towards profitability. However, they do continue to land some pretty big contracts inclusive of both government and private contracts. And just for the edification of the viewers, this is a company, I'll throw their company profile up here, but they basically operate small satellites that companies can purchase the data from. So let's take a look at their most recent investor presentation. You can see that their last earnings came out on May 10th of 2023, so we're about a month and a half, or really a month past their last earnings. I would highlight that they walk through a lot of their recent growth. Again, they do continue to grow revenue, but I really want to highlight the forecast because I think that this is super important to acknowledge and look at. And this is something that I would call out. If you want to look at this information, it'll be in the description. But they're continuing to grow their customer base. They're continuing to show revenue growth year over year, 13.9 million to 18.4 million. I would highlight that this quarterly revenue compared to their total growth, or rather their total market capitalization, is quite substantial in terms of the fact that we're looking at $18.4 million. If you annualize that, you're looking at still south of 80 million, and they are currently a $250 million company. So I do have some worries there still. And then I would also highlight that their margin still isn't where it needs to be in terms of being able to really drive towards profitability. Down below, I'll showcase the 2023 outlook. They're currently forecasting this year to be between $90 to $96 million. And I think that that is super impressive, except for the fact that I went out and I looked at the original SPAC presentation that I have looked at previously. So I'll bring that up now. And what I have here on the screen, albeit in low res because this is off of the SEC website, not necessarily off of BlackSky's website, is from their original SPAC presentation. So the original presentation showcased that 2023 was going to have, or the one we just looked at was going to have 93 million in total revenue. However, you can see that the original SPAC presentation had more than double that at 223 million. Now, if you've been a friend of this channel, you'll know that we heavily cover a lot of SPACs. In particular, the one that we're continuing to follow is STEM, and something that I always highlight is they continue to be in line with original SPAC presentations, which is why I continue to trust that management team, despite the fact we've seen some large misses on some major goals. What I'm showcasing here is a massive drop in overall enterprise value when the company's originally expecting 223 million. And they're currently projecting 23 million, I do have some major concerns about what we're looking at or evaluating there. The follow-up to that, if I go down below, would be the expectations on profitability. You can see that in here they're expecting gross profit of 164 million. They're expecting total profit under an adjusted EBITDA number, so it'd probably be lower than this, but overall profitability really in 2023, and I don't believe that that's going to be the case at this point in time. So this is an example of a company that I wouldn't touch due to the management team failing to meet expectations, as well as not necessarily being valued at a point where I really see that it could ramp up from here. They do have government contracts, so I don't have major concerns about them going to fail or go bankrupt. However, this could also be an interesting buyout target in the future. At this point in time, this isn't one that I'm touching, but I also am not offering any financial advice as I'm not a professional. But please let me know in your comments down below. Thanks. Talk to you later.